David, we just saw the corn oil numbers. Maybe we should start from there. Very disappointing. Your thoughts on how the market is reading those numbers, particularly from the petroleum marketing space?
Yes, thank you, Wole. From the petroleum sector, there are mixed fortunes. Corn oil actually announced their second quarter result today. It was a dismal performance compared to their performance for the same period last year. Corn oil reported a profit after tax of about 450 million naira compared to about 2.4 billion naira, which they made for the same period last year. That was a very, very sharp decline. However, earlier on, Total had released their second quarter. It was an impressive performance. Oando also released theirs. It was also a little bit impressive. But however, there are mixed fortunes in the petroleum sector. For instance, today, most of the big names in that sector, Mobil and Total, shed weight very, very severely. Mobil lost about 5 naira 75 kobo, while Total lost 4 naira 99 kobo, thus dragging down the market today. Although Oando gained slightly, moved up by about 11 kobo, but that couldn't help the market to survive the severe decline caused by huge losses suffered by those major companies. Nigerian breweries also came down heavily, losing 3 naira 30 kobo. So those were actually the severe losses that drove down the market today.
Of course, we've seen the...
In addition to that...
Sorry, David, I was just going to say, of course, we've seen the market rally quite a bit over the last few weeks, and so it's really expected that we would see a pullback at some point. But let's shift focus a bit to the insurance sector, and I see the likes of Continental Reinsurance and quite a number of other names putting out numbers recently. Continental Reinsurance, very, very impressive numbers, over 80% growth in profits. How is the market reading the insurance space right now? And maybe we should start with Continental Reinsurance.
Yes, the insurance sector appears to be recovering very fast from the damage which they suffered a few years ago as a result of their exposure to equities. We are seeing very, very impressive results emanating from that sector today, just like you mentioned. Continental Reinsurance almost doubled the profit after tax which they made last year. They reported a PAT of about 1.02 billion naira as against about 580 million naira which they made last year. NEM also came up with an impressive result today, reporting a profit after tax of about 1.02 billion too, as against about 984 million which they made last year. And
okay,
so
but
we are seeing
sorry to cut in, David,
sector
but
that is recovering.
The results that we're seeing, are we seeing any impact on the share price? Are investors moving money into the insurance space at all? Because we know that quite a number of them have actually traded down to their nominal values.
Yes, we are actually not seeing a massive reaction yet or impact of the improving fundamentals of the insurance companies on the demand for their securities. But however, the demand for Continental Insurance today actually benefited from the result that was released. Indeed, Continental Insurance gained about 3 kobo today, although the result released by NEM had no impact on either the demand or the price of the security today. In fact, there was actually no trade on NEM today, which was quite surprising in spite of his very, very impressive second quarter performance. But generally, the insurance subsector is recovering very fast, like I said, from the damage to their balance sheets occasioned by the meltdown of 2008, 2009. But right, investors are still a little bit skeptical about that sector.
Okay, let's look at the broader market now and your outlook for this week. Clearly, the market is dealing with quite a number of issues. Of course, it's a higher interest rate environment after that MPC decision. Of course, the Naira has been under pressure. It's trending a little bit today, but I think many people are still a bit worried, especially if oil prices were to come down. Your thoughts on the market's movement this week?
Yes, if you look at the way the market started today, with a very low volume of about 188 million, way below the average we have been recording in recent times, is indicative of the fact that demand has started weakening in the market. And it's not unlikely that the macroeconomic policies, especially the recent monetary policies that tend to tighten money supply in the macroeconomy, is already having its effect on equities. And so we have a very high interest rate environment now crowding out funds into fixed income securities. Secondly, it's not likely that the fundamentals of the market can drive the market now, considering the fact that most of the major companies other than Guaranty Trust Bank have already released their second quarter results. And so we don't have any price sensitive information now that is capable of driving the market moving forward. And so we are going to probably witness a market not with high demand, with weak demand, and perhaps the all-share index revolving around the 23,000 points. I am not very, very confident that the market will be able to surpass the kind of rally which we witnessed in the past 2 weeks.
All right, David, thank you so much for joining us and, of course, sharing your perspective on the market. David Adonri is General Manager at Lambeth Trust Investment.